Right now, my net worth is just over $300,000, and in this video, I want to walk you through exactly how I plan to turn that into $1 million by following a boring, repeatable plan that I believe will work. I'm just a 26-year-old engineer with a solid income and a long time horizon to invest, and an investment plan that lets compound interest do the heavy lifting for me. In this video, I'm going to walk you through my plan to grow my net worth, and if you're in your 20s or early 30s trying to figure out what a path to $1 million net worth could look like, you've stumbled upon the right video. Leave a comment down below what your net worth is and what you hope to grow it to by the end of the year. This video is not meant to be a flex. This is meant to provide transparent numbers and talk you through exactly how I got to the point that I'm at today. So let's get into it. I want to quickly break down where the $300,000 net worth is actually coming from because my net worth is a culmination of multiple accounts and assets. I'm going to put a screenshot up here. Right now, my net worth is spread across different investment accounts, such as a 401k, an HSA, a Roth IRA, individual brokerage accounts, and soon there will be some crypto accounts in here. I'm working on increasing my Bitcoin position, but right now I only have about $300 in Bitcoin. So I don't really include that in my net worth at the moment. And then I have my car paid off, which is worth about $20,000. And then I have various miscellaneous items worth $10,000. I also have $25,000 in an emergency fund. The only debt I have is student loan debt at about $20,000. And this makes over 80% of my net worth tied to investments. So this number is very much tied to how the market is doing, which I'm fine with because I want my net worth to be based on investments right now so I can use compound interest to build long-term wealth. I don't own a house, so I don't have property in my net worth. I'm just renting at the moment. And as I get older, I'll slowly start to diversify out of investments and probably own a home. And then eventually, like I talked about, own more Bitcoin and other physical assets. But for now, my net worth is tied mostly to investments. So my goal is $1 million by the age of 35. And you may ask, why specifically $1 million? Well, for one, being considered a millionaire is going to be a huge milestone, and I can remember dreaming about that moment as a kid. And now looking at the papers, this number is realistic, and I can accomplish this in a relatively short amount of time from right now. I think there are 5 key milestones that almost everyone hits on their net worth journey. And what's important to understand is that each of these milestones changes how money feels. It's not just a number on paper. I'll get into these milestones here. So milestone number 1, I think, is having a net worth of $1, just having a positive net worth. Literally getting in the positive is huge here. That might sound small, but it's a big deal. A lot of people come out of college with a negative net worth. They could have student loans, credit card debts, car debts, and that was me too. When you're negative, you're not really building wealth yet. You're just digging yourself out of a hole. So getting to that first positive number is all about momentum, and you're moving forward in your net worth journey. Once you hit that positive net worth, you're in control of your finances instead of your finances controlling you. And that mental shift matters way more than people realize. The second big milestone is hitting $10,000. This is where things start to feel real. You're officially in the 5 figures, and more importantly, you've proven to yourself that you can save and invest consistently. $10,000 doesn't make you rich, but it gives you stability. And you start to feel less fragile financially. An unexpected expense isn't an emergency anymore, for the most part. And you can begin to realize that with discipline and time, you can actually build a lot of net worth really quick. The third milestone, in my opinion, is hitting $100,000, and this is where the psychology really changes. Getting to your first $100,000 is usually the hardest because it mostly is built through your own effort, saving, investing, and not screwing up. At this point, compounding really starts to show up noticeably. Those market swings are going to matter more for your net worth, gains are going to feel bigger, and you're going to realize that your money is working alongside of you instead of you doing all the work alone. The fourth milestone, in my opinion, I think is $500,000, and I want to get to this pretty soon here. This is where momentum really starts to take over. At this level, discipline matters more than hustling for that money. Staying invested, staying patient, and not making emotional decisions becomes the main job. And then the fifth and big magical milestone that I'm shooting for, and the point of this video, is $1 million net worth. Not because everything magically changes overnight, but because the math changes. Get this. If you hit $1 million net worth, a 10% return is a 6-figure increase in your net worth in just an average year of the S&P 500. Let's just say hypothetically all your net worth was in the S&P 500 at $1 million and it grows at an average of 10% a year. You're making a six-figure salary by doing nothing. That's when people really truly start to feel financially free. The big takeaway here is that each of these milestones I just spent a couple minutes talking about, none of them are accidental. Every one of these levels is reached by the consistency and not falling for the get rich quick schemes. If you're early in your net worth journey, especially around that first milestone, just trying to hit that positive number, you're just getting started on a wonderful journey towards financial freedom. Now, let's go through the actual strategies I use to get my net worth to $300,000 because I think a lot of people hear that number and assume it was just some crazy stock pick, some moonshot lucky crypto pick, or me just inheriting a lot of wealth. And it was neither. When in reality, the foundation of everything I've built so far has been pretty boring. And the first and most important part of my plan was maxing out my tax advantage accounts as early as I could in my career. And to be clear, I didn't do this perfectly either. I lost out on about 3 years of Roth IRA contributions early on because I just didn't know about that account, which is painful to think about now, but we're going to get into that later. The point isn't that I did everything right, it's that I understood how powerful these tax advantage accounts that I was invested in were, and I made them a non negotiable as part of my financial plan early in my career. I already made a full video breaking this down, but early in my career, I prioritized maxing out my 401k, and that decision quietly did a lot of the heavy lifting for me. Not because the returns were anything magical in the short term, but because these accounts gave you something that you can't get anywhere else. You got tax free or tax deferred compounding over decades with employer matches. When you're in your early 20s, it's easy to underestimate how powerful that is because the numbers don't look impressive at all at first. You're putting away a few $100s per paycheck, and the account balance moves very slowly, and it certainly didn't feel exciting for me. What you're actually doing is practicing delayed gratification and planting seeds that don't start showing up until years later. And by the time most people realize how important investing was early in their 20s, that window has already been passed. It's going to be so much harder to play catch up in your 30s and 40s. And what helped me stick to treating my 401k contributions as a non negotiable for my finances was treating them like a bill I had to pay. Just like how I have to pay rent or utilities, that 401k contribution came directly out of my paycheck before I ever saw the money hit a bank account. That way, I wasn't relying on my willpower every month, I just let the system work for me in the background. This alone, over the next 20 to 25 years, puts me on a very realistic path to seven figures without needing perfect market timing and without needing to chase risky investments. I'm a believer and I love the boring math of compounding and letting your money work for you. I'm not trying to beat the market, I'm trying to own shares of the market. And that distinction sounds small, but it completely changes how you approach investing. When your goal is to beat the market, every decision is going to feel like a test and feel stressful for you. You're constantly going to be questioning whether you picked the right stock, whether you should have sold or bought earlier, and whether you're missing out on the next big opportunity. It turns investing into a stressful, emotional game that is just really hard to win in the long term. Most of my investments are in broad market ETFs, growth focused ETFs, and dividend focused ETFs, and the reason for this is pretty simple. I want exposure to the overall growth of the US economy without needing to guess which individual company is going to outperform next year. Broad market ETFs give me diversification across hundreds or even thousands of US companies. Growth ETFs gives me upside during strong market cycles and lets me get into the technology wave. And dividend focused ETFs give me some stability and cash flow and protect me against the downside of the first two ETFs I talked about. Together, this balance of the three different ETF groups lets me stay invested through different market environments without the feeling that I need to adjust my strategy all the time. I also don't spend my time constantly tinkering with my investment allocations or chasing the hot stock trends. I've learned that the most of the damage that people do to their portfolios comes from overreacting, to reading the news, to reading the headlines. Buying when things feel exciting and selling when things feel scary. The core of my strategy is very simple: consistent contributions over a long period of time, investing in low cost, low fee ETFs, having diversification, and letting time do the heavy lifting. That's it. No secret sauce. The hard part is just sticking to this when the market is volatile, or when your portfolio is down, or when social media is just full of people talking about, oh, you just missed out on investing in the next big thing. Steady, reasonable returns over a long period of time don't make for exciting headlines, but they're going to win in the long run. Even Warren Buffett has said that most investors, and even a lot of professionals, would be better off just owning low cost index funds instead of trying to outsmart the market. This allows me to go to work every day and not have to think about trading options, watching charts, and wondering if I picked the right stock. That mental freedom is just as valuable to me as the financial returns because it lets me focus my energy on building my career, my life, and everything else outside of my investment portfolio. So, getting from $300,000 to $1 million is where the game starts to shift a little. At this point, investment returns begin to matter a lot more than they did early on because your money is finally big enough to move the needle on its own. A decent market year could potentially move your net worth tens of thousands of dollars in the up direction and also in the down direction without you doing anything new. That is a good place to be in because you just sit back and let time do its thing. But what really could speed up this phase is a combination of this compounding return on your investment also while increasing your earning potential. And this is what I'm going to focus on next. I'm going to be intentional about my career, building skills that make me more valuable over time, and layering in side projects or trying to find additional income streams. My focus over the next several years is less about trying to find that perfect investment and more about how I can make more money to continue investing. At this point, there's also another big threat to limiting me from hitting $1 million in net worth, and that is lifestyle inflation. This is where a lot of people accidentally stall out. If their income goes up, but spending quietly rises to meet that income, it's not going to get them anywhere. Say you get a pay raise and you upgrade your apartment, or you get a new car. None of these choices are going to be inherently wrong in the short term, but when that raise gets absorbed by lifestyle inflation, you're not actually buying yourself financial freedom. You're just stalling your time. You're locking in a more expensive version of your financial life. For me, if I get a raise, it's not going to go automatically upgrade a lot of stuff. Now, I'm still going to use some of that and have some fun, but I'm also thinking long term here. If I get more money and increase my earning potential, I'm going to dump that into investments. I talked about this earlier in the video, but I would like to increase my Bitcoin portfolio. When I get more money, I'm going to add to that. I'd also like to max out my Roth IRA every single year. I always just think about how I can buy my financial freedom when I can also increase my earning potential. That combination is going to be awesome. That gap between what I earn and what I spend is going to be the lever that accelerates the time frame. For me, going from $300,000 to $1 million. And another account I kind of briefly talked about earlier was the brokerage account. So after I max out all these retirement accounts to increase my net worth, any excess cash is going to go straight into that taxable brokerage account. This, for me, is going to be the bridge between traditional retirement investing and building my early retirement instead of the traditional retirement that you hear about at 60 years old. Retirement accounts are incredible for tax advantages, but they also come with a lot of rules, restrictions, and timelines. And I don't want my entire financial future locked behind an age restriction. So the taxable account gives me flexibility. It's money that is still invested in the same ETF strategy I talked about earlier, still compounding, but it's not locked up until retirement age. If I decide I want to slow down earlier, take a career break, pivot into maybe a lower paying job and more meaningful, this account becomes a tool that I can use to make those decisions possible without blowing up my long-term investment plan. Long term, I also think about diversification beyond just stocks and ETFs. At some point, I do want to own a house because having a paid off or partially paid off place to live in changes the cost of living equation in a very meaningful way. It's going to add another layer of diversification to my net worth, and that wouldn't be correlated with the stock market. There's a lot of other pros and cons to owning a house, and I just made a video about that. But long story short here, my brokerage account and potentially getting into real estate in the near future is going to help me achieve that jump from $300,000 net worth to $1 million. However, I really wouldn't be surprised if I hit that $1 million net worth and still can't afford a home yet, because in the city I live in, homes are really expensive. I just think that'd be funny nowadays. You can be a millionaire but still can't really afford a home. It's just funny how sometimes you get in those situations of, prioritizing investing earlier in your 20s, and next thing you know, you hit $1 million net worth, but you don't own a home yet. In the long run, I do still think it's a good investment to own a home as long as it's within your means and you could afford the mortgage. The net worth that I've built happens slowly, quietly, and honestly, it's really boring. But then one day I can zoom out and realize the compounding effect has really been working for me. It's years of consistency stacked on top of each other, years of patience, years of resisting the urge to overcomplicate my investment strategy. The plan doesn't change when I see massive market drops or massive market bull runs. And now, could this hitting $1 million net worth happen faster than 35? Yeah, absolutely. Could it also take till 40? Absolutely too. If I can figure out a way to increase my income, which I'm currently working on doing, and if markets perform well over a long stretch, or if the side projects start generating cash quickly, this timeline could speed up for me. And honestly, if you're watching this and you're early in your wealth building journey, do not be ashamed and don't take this video as a flex. My intention of this video is to be transparent, and this video is to be living proof that taking the long and boring road, not taking shortcuts, can build you wealth over a long period of time. You need to develop a plan and stick to it. And that's pretty much all I got. I just wanted to walk you through my net worth journey and what I'm going to do to hit $1 million. So if this video helped you think a little differently about your own financial path and potential net worth journey, hit that like button, subscribe for more personal finance content, and I'll see all you guys in the next one.